I want to talk about insurance. I mean, I don't really want to talk about insurance, but we need to talk about insurance because it's a problem here in California. So I pulled an article from NPR. It's actually kind of a readout of an interview that they did regarding this. And it's titled, California Hopes to Lure Insurance Companies Back with Extreme Regulation Overhaul. I don't think that's overstated. Extreme regulation overhaul is kind of the big three when it comes to what is going to happen, what has to happen here in California. It is extreme because there's so far to go in fixing this problem. It is at the regulation level, and it's got to be fixed. It's an overhaul issue. So,
and you know, Andy, here's the thing. This is pertaining to California, but we're seeing this in Florida too. We're seeing it in Texas.
Good point.
You know, so it's happening everywhere, and the whole thing is based on global warming. Right? Is the insurance companies is just, and then inflation too. Not only are we paying more for our food and services, but now we're paying more for our homes, lumber, and all that good stuff.
And I'm trying to keep the conversation more towards like what are functionally our problems, and it is happening other places. The cause is a wide variety. I know that we had a very massive fire here in California that a couple year and a half or two ago.
The Ventura one?
And the culprit was a guy who got lost. A guy was lost on a hike, and he had to start a fire. And that fire caught and it destroyed like 1,200 homes or something.
Wow.
And so like that was not necessarily a global warming issue, but this person happened to be lost and they were in the trail and that's what happened. And so but because of that, there's like this domino effect. When it's whether the culprit is warming or if it's a lost person or it's just a fire that sparks of a car on the side of the road or something, like
because
the issue is
their power lines.
The issue is the PG&E one. That was a big deal too.
I was like that one.
The issue is that these insurance companies are kind of they're restricted on how much they can increase premiums year over year, but then that's not kept. That's not been in lockstep with the increased price of cost and labor, like cost of goods and labor to do replacement materials. So in this case, now we have like all these big insurance agents like State Farm and Farmers and Allstate and that are like buy California and then maybe buy Texas or buy Florida because they're like, hey, now we're just got risk everywhere, even though they're in the risk business.
I mean, for years, I remember I used to calculate for a single family residence. I would calculate 65. If I went 75, it seemed too high.
So dollars per month, just so you know.
Condos?
Dollars per month.
And then for condos, it was like, I'm going to always say 30 to 35. Sometimes 45, I'd be like, we got to go shop this. And now they're at 85.
You know, pulling some like files from before, and you're looking at the insurance. I was like, $34. Well, what the? And
what happened? And that was with the $500 deductible.
Well, and so that speaks to the scale that these companies are operating at. Like they could afford at that time to give someone insurance for $34 a month, $60 a month even. But now it's like $200 a month. $250 in some cases, depending on the area.
I'm starting to quote at $150.
But
that's exactly right.
My point is that for those who have stayed, that's what's required. But that even then is somehow still not enough to lure these companies back. I'm saying lure because that's what they're using in the article here. But that's the issue is that they have to get and entice them to come back and do business in California. And that's an uphill battle because they're going to have to do this like either one-time exception where they can like jump premiums back to where it makes sense. But then the argument on the other side, guys, is, well, they're making billions of dollars. Why can't they just take that from somewhere else and offset it here? I don't know why they can or they can't. I'm not sure if it's an actuary issue. But I understand the argument too, because I've heard that in the comments from people. Like, hey, these people are making billions of dollars. What do you mean? Why do they need to get lured back to California?
No, totally.
Because they can choose not to do business in here. That's why. They ultimately have a choice.
But I do like the story because it's true.
So you know, right now I know that the difficulty in getting insurance is stopping deals. Is that true, or am I overstating that? Is that true or untrue?
So I think it just really depends on the area that you purchase, because now I had a deal that they were in a fire zone area and the insurance was going to be around $370, $350, $370, and that completely shot their DTIs.
Wait, a month? It was going to be $370 a month?
Yeah. And that's here.
That was here up the street in Eastlake, brand new build. You know, the house probably 2-3 years old, if that, brand new. And you would think like, hey, it's new enough. There's nothing like, you know, maybe it's a little bit more, you know, favorable for the insurance company to want to have that appetite.
And they're going to build like a park or something usually. So there's like, consider it's brush fire because they haven't cleaned it out yet. Right.
So you're talking like $4,500 a month.
That's what it was.
A year almost.
Yep.
That's nuts.
Yeah.
Well, okay. So then you couple that with the solution, if you will. I'm gonna air quote solution here, because the solution is the California Fair Plan, which was never intended to be
an actual policy,
an actual solution. It's kind of like a absolute last resort. If you can't get coverage, it's bare bones at best. But I'm reading here, I mean, it can be very costly. That's also thousands of dollars a year.
Yeah, no, exactly. I mean, you see in the story here, Mr. Boyd, it could be over $8,000 with the California Fair Plan.
$666 a month.
That's a lot.
Yeah, that's a ton.
That's more than a car payment.
Yeah, that basically is a car payment, right? I mean,
depending.
Shoot. So okay,
depending on your credit.
so if the regulation is changed, so I guess this is the thing is where I understand people are complaining about. They're like, look, if the premiums were that low, but then now we're finding out, or we're being told that they were artificially low, well, then what was the right price? Like, they were making up for that somewhere else to be market competitive. Yeah. So that means that in coming back, maybe Allstate doesn't need to be competitive with State Farm and Farmers because they ain't going to be in town. Maybe you have less competition. That could be maybe a case for keeping premiums a little bit more affordable and have an appetite. But I think it's really more of a risk issue than a premium cost issue.
Yeah.
Yes, they got to make margin. They're a company. They have expenses. I understand people don't like that and they make billions of dollars. I get it. I totally understand. I'm not trying to defend for them. I'm not carrying their water. The point is that something has to bring them back. And if they were artificially keeping rates low before, they're going to have to get an exception to get them right-sized right now so that people in California can actually get insurance. It's only going to go so far for so long before people start knocking on the door of the regulation agency and be like, hey, stop effing around.
Yeah.
We need to have coverage in our place because California Fair Plan ain't going to cut it.
Yeah, and what people aren't discussing too, Andy, is next year, well, when people's policies are due, when Allstate and Farmers say we can't renew your policy, that's going to be a lot of people. That's not just originating new business right now, but now they're completely getting out where they're not going to even let you borrow
the renewal.
Like renewal.
No, and
that's a big issue.
What some clients have came back and contacted me once their policies were done this year and last year is that, hey, how do I renew my insurance? And then turns out that they had a forced insurance by their mortgage company. And that's something that, if your policy dies out and you don't renew it, they're going to play insurance. The bank requires you to have, your property insurance. So they're going to take it to themselves and be like, hey, we're going to put a forced insurance, and you'll see your mortgage statement adjust. And it's not going to be like, hey, cheap, 35, 30. It's going to be pretty pricey as well. Yeah. So, that's something to account for. If you're not going to renew, you definitely need to find an alternate solution because they're going to pay it somewhere or another.
Exactly. What I like about here with Ricardo Lara, the one that was talking about this article here, is we're on our way to enacting the state's largest insurance reform in 30 years.
Yeah. Yeah, I mean that states right there like how broadly this has gone unaddressed. Part A, Part B, how quickly the replacement costs have just gotten out of control. At the same time, that there's been so much demand for things to be replaced here in California.
Yeah, absolutely. I mean, listen, they're also talking about like tenant rules, right? Of the rents increasing, but if our insurances are increasing, we have to pass that on.
It's going to spill over,
Because I know my house, it increased. If I was paying, I'm going to say I don't pay the bills. Poor Tanya, she does all of that. But it went up, like if we were paying $2,000, it went up to $3,500.
Right.
It's making a difference.
Yeah. Along with everything else that went up.
Along with everything else.
Fuel, utilities, gas,
I'm hoping,
groceries.
Exactly. So I'm hoping that these guys are correct and they bring this new reform and it just, helps us all out just to even obtain insurance.
Well, yeah. So I think that's, good, perfect. So glad you said that. Your words right out of my mouth. It's like we need the ability to get insurance and then we can handle the cost of it. Because not even having an option, or let's say having fewer options, it drains market competitiveness. That means whoever's remaining standing right now, they can keep their prices where they are at as long as they're solvent and they meet the state's regulatory solvency test. Then they can afford to stay in business, and they don't have to compete with these massive national companies that might be undermining them price-wise, and I think that's where some of that pricing was coming from, like coming lower.
Yeah.
But now they're not going to really have a choice.
It's crazy. Before, there were so many options. Now, before we're like, don't worry, we'll connect you with somebody. Now it's like, before it was like USAA, and now USAA is actually not even doing it. They're going through a third party, putting us in contact with
everybody's going through third party.
Yeah.
I used to call insurance agents. I'd be like, I can do it, and then no, I need this information. When was the roof made? When was the last time they did this?
Oh, yeah.
What's the age of the? I'm like, dude, you're like like, what?
It's like a full on statement of information. But
I'm like, I don't even know this stuff. Like, it used to be just their name, the price of the house, the address. Let's go.
So, well, hopefully these new rules come in place, and they're saying in 2025.
And as much as we're going to bitch and complain about it, look, this results in lost deals. Number one, I already know it does. Number two, this actually changes the amount that people can be approved for.
Yeah.
Whether I want to admit that or not, it's just true. Yeah. Like if $100 more a month in your insurance than what you're budgeted for changed your debt to income ratio, and now all of a sudden you can't afford because of the insurance premium.
Yeah.
That means you have to get a lower loan amount, or a better interest rate, or something. You have to have something else to offset that.
Payment.
That's going to be a lower loan amount. It's going to be, take another $30,000 to $50,000 away.
Right, but then that means power. now you're unable to go compete at that level that you might have been. So I'm saying that to demonstrate that the ripple effect of this is not just insurance or not insurance. It's I can get insurance, and now there's another problem behind that. So the affordability is even getting crunched because of this too.
I had a conversation yesterday with one of my friend's moms, and she asked me, she's like, when are houses going to be affordable again? She's like, we're at like $97,000 between me and my husband, and I'm like, unfortunately, that's like the bare minimum entry to be able to afford something, and even then, you could only use 50% of your income minus your debt. So she's like. What? Yeah. And I'm like, it sucks to say that, what's driving prices up is that there's no inventory. It's not like, hey, when's the market going to crash? Unfortunately, we don't foresee that happening. And fortunately, there is people out there that do have the dual income that are above 100,000, and or some are making sacrifices. But it isn't something that like right now anybody could get in and buy a house. You really have to be prepared, or you have to be well approved, or have enough money in the bank or in your pockets to be able to stretch out your purchase price if needed. Because even in the higher price point ranges, we're seeing people like go up in price. Like one house that one of my clients was looking at for $1.8 million is talking about offers getting received at 2.1.
Yeah.
It
just depends on the area.
That's going to be a problem for people. And
that house is going to have a pool.
Yeah.
Higher insurance.
Income and insurance.
Imagine the insurance on that property.
Yeah.
It's
going to be a lot more.
The troubles are on the horizon are underscored by a multitude of variables. There you go.
That's it. That's it.